Welcome back to the Wolf of Property and Casualty. I'm your host, Derek Lasniak, 15 years of commercial broking experience, focused on the middle market, upper middle market, national account space. The time off from acting as a professional has afforded me a ton of time to not only turn into a LinkedIn troll, but also keep in touch with what's going on in the insurance world. It's amazing how many things that I never paid attention to because I was so fucking busy. And it's been a lot of fun. In some ways, I feel very blessed that I am on the sidelines, so to speak, right now, watching this wave of artificial intelligence. So tonight's episode's it's a little short, but I've been constantly seeing the news about Corgi insurance. I thought Corgi was a dog. Some things are just popping out the page of me about Corgi insurance. And I want to just talk about it. The news hit my desk today because they raised $100 million, suggesting a $2.56 billion valuation. And there was some comments coming out from the people who were part of this series, focused, and said it was almost too easy to raise this money. So a couple of things that jumped out to me that I think make this a meaningful news. And my prior company, I would say, was on the cutting edge of insure tech. And there is no doubt that insure tech, even 5 years ago, revolutionized the way that insurance, which is a crusty business, was getting done. I mean, we had a simple product that we invested in and then implemented that took all of the applications we used to send in various forms of editable PDF and then turned it into like a Facebook profile our customers filled out and then backfilled the applications for the carriers. That's child's play compared to, I'm sure, what some of the things like AI are doing now. But everybody is focused on AI and what's going on, especially after Acrisure taxed 2,500 people in Grand Rapids. I think those are probably more back end jobs, but everyone's freaked out about, what's going to happen specifically in the broker community. And so at front and center, we had this Corgi insurance platform. And it is not the first company that has tried to make a run at somewhat vanilla small business. Can I put it in this box? Highly repeatable automated business. However, it is the first one that is trying to do this without an agent. And I'm a former agent, and I would say I'm largely, protective of the agent distribution model. But this is the first, to my knowledge, of mainstream business insurance that is being sold directly to the consumer. One of the things that I've thought about with AI infusing itself into the ecosystem for insurance is that some of this highly repeatable volume business is likely going to be interrupting the broker model because AI can be so influential in decision making and helping with underwriting. I remember when I first started out in the insurance business, I was chasing bops and I was chasing tech startups all over Madison. And I thought it was really cool that I could quote them online with CNA, Travelers, Chubb, the carriers, and even just quoting online a commercial account. It was still tedious. Now I think about that quoting process, but being driven and guided in a question and answer format. That could have saved me hours and hours of time when I was quoting. And then I realized there's no need necessarily for me as an agent. I wasn't bringing any inherent knowledge that AI can't do for the actual consumer. And frankly, in this role, in this type of business, which I would say is true of 95% of personal lines as well, there's probably not a need for a broker. And the insurance carriers or the backers or whoever is backing Corgi Insurance have probably realized too that they don't need to pay 15, 20 points of commission plus a contingency for something that they don't need anymore. I still think middle market national account space, that's not going anywhere. It's too sophisticated. It's too complex. But this kind of micro business is ripe for disruption, specifically to the broker model. I've got some issues with Corgi outside of the fact that I don't like small dogs, but I got some issue with Corgi at face value. First of all, and I'm way outside of my realm when I talk about this, but fucking $2.5 billion valuation on this model. And my understanding is they have $40 million in gross written premium. That's got nothing to do with the insurance fundamentals behind it. I mean, keep in mind, SpaceX is going to trade for $2 trillion on less than $1 billion in revenue. So I'm not here to suggest what I know is a good investment or not, but that seems a lot. Second of all, there's some things that are just really wild about this. Here's what Corgi is planning to do. They want to sell to the life cycle. And I used to sell to small business in tech. And I think this is really smart because the message that I used to sell to small business in tech is you buy the insurance because you don't have any money. Nobody in tech that's also raising their own funds has any money, especially if they're early stage. You buy the insurance you need at the time you need it. You don't worry about effective date consolidation. So the way they're setting this up, pre-seed, seed, series A, growth stage, custom package, I think is really smart because it allows you to grow within their platform. The things that I thought were really weird about Corgi that jump out to me is if you scroll down and you look at their solutions and their products here and their solutions, they're getting into some industries that aren't just series A growth and custom. Trucking, fintech, health tech. I guess those are startup, but trucking. And that tells me that this is an aggressive company because anybody who's following property and casualty insurance, knowing that trucking insurance is a mess, it's overpriced, carriers don't want to be in it. But again, it's probably ripe for this level of disruption. But a company that has $40 million in premium and is listing trucking as an industry they're going after that has not proven itself, does not build reserves, that's a little bit frightening. Trucking, we know a missile going down the road and the potential liability. So I thought that was a little weird. The second thing that jumped off to the page of me is when I'm going through the Corgi website, if I go down to like company, they have a bus. They have a bus that runs, back and forth, I guess, in San Francisco. Interesting. If you click on something called Corgi ETFs, to say that revolutionizing distribution of small commercial isn't maybe disruptive enough, they're also creating electronically traded funds. I mean, I would think maybe write some more premium. But again, I think this company is on the cutting edge of something that is going to be the new normal. The next thing that jumps out the page to me is you got to dig deep. One of the disclaimers when you go down, and I heard this kind of through some looking up on Twitter and stuff, it is unclear who the insurance company is behind this. So if you've heard me talk about managing general agents before, an MGA, which borrows insurance capacity, cyber liability is known for this. I'm going to borrow Munich Re's capacity or Arch, and I'm going to call my company Coalition. We're better at cyber, and we're going to handle the underwriting, the claims, and the collection of premium and the pricing and all that. We're just going to do it with the backstop of Munich Re in their balance sheet. Well, Corgi feels like an MGA because Corgi is not a registered insurance company, but they don't necessarily operate just like it. And it's unclear exactly what the insurance is behind it. I looked, I can't find an insurance company coming out and saying, I back it. The word is, and this is what I read just from some online rumors, and you'll see this here, your insurance could be with, and these are fine, admitted carriers, even not admitted carriers, who cares, surplus lines carriers, great. Here's where it gets a little interesting. Risk retention groups, captive insurance companies, association captives, reciprocal insurers, interinsurance exchanges, protected cell companies, segregated portfolio companies, insuring pools, syndicates, fine, joint underwriting associations, I don't know what that is, offshore insurers, alien insurers, I'm assuming not from outer space, purchasing groups, alternative risk transfer vehicles. To me, if I'm going to be targeting this segment and I'm going to be providing an alternative to Chubb, Travelers, CNA, I still need to be backing the insurance with something that feels tangible. This list doesn't make me feel like I have any idea what the insurance is. If it's a risk retention pool, am I sharing my insurance with the next guy that signs up on Corgi? This to me is a little bit concerning. I don't know what the insurance is. Most of all, I don't know what some of these are, and I've been doing insurance a long time. Second is more than half of these are not A-rated. So if I just think fundamentals here, how are these people going to issue a certificate? Startups are going to be out there. They're going to be early seed companies trying to get business. People are going to ask them for certificates. And when you don't have an NAICS code, how's that going to work? I don't know if anyone's run into this. I have not run into somebody with the part of the $40 million in premium. And I don't know how this pricing works. I think this is incredibly innovative. I think this is an area for disruption. I think this is going to be direct to consumer type business, especially in these small business segments. And clearly Corgi is having their moment right now. I just have a lot of question marks because I'm an insurance nerd and I find the valuation to be kind of wild. And it'll be really interesting to see how this unfolds.